Palantir stock is up over 63% in the past year, but the stock has dropped in recent weeks after their Q1 earnings report. But there is an upcoming catalyst for Palantir in the coming weeks that could see the stock price rise again. In this video, I'm going to analyze Palantir's stock and what I expect in the near term. This is a must-watch video for Palantir stockholders, and I will address the issue of insider trading and its effect on the overall stock. Before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs you nothing, but it helps me out so much. I'm aiming to get 400 likes on this video. Help me hit that goal. Subscribe to the channel and hit the bell notification if you're new so you don't miss out on any new content like this. I'm not a financial advisor. This is not financial advice, so always do your own due diligence. Now there's a lot to discuss, so let's get straight into it. So what is Palantir Technologies? Palantir is a software company that builds the world's leading platforms for data-driven operations and decision-making. Palantir specializes in data analytics. Its software lets businesses capture and integrate data, develop and manage AI and machine learning models, and build applications that incorporate those data sets and models. These applications help workers make better decisions, and Palantir develop long-term partnerships with organizations, working together to help them realize the value in their data and transform how they operate. The company provides solutions for many industries, such as automotive, cyber, financial compliance, law enforcement, and defense forces, among others. It serves various private enterprises, public institutions, and non-profit organizations. Palantir is a fully global company and has operations in North America, Europe, Asia, and the Middle East, but Palantir is headquartered in the US. So that's a very simple breakdown of what Palantir is and what they do. Now, Palantir recently debuted a new product called AIP, or Artificial Intelligence Platform, which brings support for large language models and generative AI to its existing software. With industry analysts having praised Palantir for its technology developments, ranking Palantir as a leader in the artificial intelligence and machine learning and data science market in many reports over the past 2 years. AIP can be huge. CEO Alex Karp said demand for AIP was a key growth driver. As he said here, momentum with AIP is now significantly contributing to new revenue and new customers. AIP is the connective tissue, and the organic and unconstrained demand for its capabilities is unlike anything that we have seen in the past 2 decades. So this is what CEO Alex Karp has said in his recent shareholders letter. Looking at the recent investors presentation, Palantir reported encouraging financial results in Q1. Although Palantir beat analyst estimates with encouraging results, they failed to meet the inflated expectations that had been set. US revenue grew 40% year over year and total revenue grew 21% year over year, but only 4% from the previous quarter. Its customer count climbed 19% from the previous quarter and 69% year over year, with the average existing customer spending more. In turn, revenue increased to $634 million, and Palantir recorded adjusted EPS of 8 cents. Now, importantly, Palantir recorded their 5th consecutive quarter of GAAP operating profitability and their 6th consecutive quarter of GAAP profitability. This is important and paves the way for a bigger development that I will be speaking about in just a moment. In a lot of ways, Q1 2024 was by far Palantir's best quarter to date. They have increased their income. They have increased their customer bases, signed 87 new deals of at least 1 million or more, and have ended the quarter in a better position than before with no debt and $3.9 billion in cash and cash equivalents. But Palantir also signed major new deals in recent months, such as the deal with the US Army to deliver the Titan next generation deep sensing capability, which is worth over $180 million. Or the deal with Oracle to provide secure platform and AI solutions that power businesses and governments around the world. With guidance set for Q2 of between 649 and 653 million, Palantir did also raise their full year 2024 guidance, estimating 2024 sales of between 2.667 billion and 2.689 billion. And they expect to report free cash flow of between $800 and $1 billion this year, providing the company with enough room to target acquisitions and invest heavily in organic growth. Can Palantir join the Magnificent Seven by 2030? The software and AI and analytics platform for enterprises and governments has been growing quickly since going public in 2020. It's also growing a legion of enthusiastic shareholders. The growth has some arguing that Palantir is poised to become one of the next big technology stocks. So can Palantir join the Magnificent Seven by 2030? Now, as we already know, Palantir was founded 20 years ago in 2004 and has both large and growing government and commercial contracts. It has 427 commercial customers today, up from just 49 back at the end of 2020. In recent years, the company has invested heavily in its AI platform to further advance its platform for its large customers. Palantir now has 554 total customers. These customers value Palantir's software platform, which should lead to more customer wins around the world, and this in turn can drive revenue growth for years to come. So we've already talked about Palantir's growing revenue and customer base, but another positive thing about Palantir is the fact that it's growing while generating profits. A couple of years ago, Palantir had an operating margin of negative 100%. Over the last 12 months, it has posted a positive 8% margin that continues to climb higher. With extremely high gross profits, Palantir's bottom line profitability can be expected to be quite healthy once it matures. But can Palantir break into the Magnificent Seven by 2030? First of all, if you don't know what the Magnificent Seven is, this is the 7 most valuable mega cap growth stocks. What was originally commonly known as FANG 10 years ago, consisting of Facebook, Amazon, Netflix, and Google. This has been expanded in recent years to include the likes of Tesla and Nvidia, and is now better known as the Magnificent Seven. There's a lot to like about Palantir. However, optimistic investors need to be realistic about whether the company will be a technology giant anytime soon. It is simply not large enough. It is simply not a large enough business financially. Palantir did $2.3 billion in revenue over the past 12 months. Revenue has grown at a rate of 30% since 2018. So let's say the company can grow at a rate of 30% from now until 2030. With these estimates, Palantir will likely generate $18 billion in revenue annually in 2030. Now, $18 billion is huge revenue for any company. And even if Palantir exceeded this, and let's say, for example, if Palantir managed to achieve multiple times this, let's say $50 billion, for example, it would still be some way short. Many of these big technology companies generate annual revenue exceeding $200 billion. Alphabet did $318 billion in sales over the past 12 months, while Microsoft did $237 billion, all with strong gross margins just like Palantir. That is more than 10 times what Palantir could generate if revenue keeps growing at a 30% rate for 7 straight years. So can Palantir be a good stock to own over the long term? Sure, as long as it keeps growing revenue quickly and generating healthy profits, but inclusion in the Magnificent Seven seems very unlikely. But what is more likely, and something that is very possible this year, is that Palantir could be included in the S&P 500. The S&P 500 is an index comprised of the 500 biggest companies in the US, and getting inducted into the S&P 500 is a big milestone that represents major validation for businesses. The eligibility requirements for inclusion into the index are no small feat. So how does a company become included in the S&P 500? And if Palantir is to get into the S&P, then why are insiders selling shares now? I will look at this more in just a moment. But in terms of market cap, in terms of trading volume and public ownership, Palantir fits the bill. But one of the most important variables revolves around profitability. Specifically, the sum of the company's trailing 12-month earnings must be positive. Palantir recently became profitable, and as we can see here, Palantir's earnings have been positive for the past 5 consecutive quarters. Well, it's highly likely that induction into the S&P 500 index will put Palantir on the radar of more institutional investors. As such, the company's coverage from investment banks and interest from hedge funds may begin to increase, and all of this is good for investors. Now, although Palantir's inclusion in the S&P 500 is not guaranteed, I would be surprised if it isn't included in the upcoming rebalancing. For one, Palantir now meets the profitability guidelines, But also, Palantir is inside the top 200 most valuable companies in the US now. Nearly every stock on this list within 100 places both above and below Palantir is on the S&P 500. So I feel that inclusion in this next month is likely and will provide a nice catalyst. Personally, I'm looking at the June 21 call options as they seem quite cheap now after the stock dropped a few weeks ago. Let me know your thoughts in the comments below. Do you think that Palantir will be snubbed by the S&P again, or will they be included this time around? And what price do you think that the stock can realistically hit on June 21st? Comment down below. So it wouldn't be right if I made this video without addressing a major fact that insiders have dumped a lot of shares recently. Co-founder Peter Thiel recently offloaded millions of shares. On Friday, May 10th, he sold 5 million shares at an average price of $20 for a total of 103 million. Following the sale, the director now owns over 15 million shares of the company's stock valued at $326 million. But he also sold 6 million shares on May 8th and 7 million shares back in March. In total, he has sold about $400 million of stock this year. And here we can see the transactions on the actual document filed with the SEC. Peter Thiel still owns a massive amount of Palantir stock. But on top of this, a lot has been made of the recent stock sales by CEO Alex Karp. His 3 stock sales so far this year amount to close to $60 million. But this is nothing new at all for Alex Karp. The CEO has been selling shares since the company went public. Now, I've seen a lot of comments saying that these guys are selling stock now because the stock price is going to go down. But in reality, Alex Karp sold far more stock than this at less than half the current price when the company went public 4 years ago and has been selling every quarter ever since. But what do you think of this? Do you think that these insider trades are something to be concerned about, or do you think that this is something that shouldn't worry investors? Let me know your thoughts in the comments below. In my opinion, there's a lot to be bullish about in both the short term and long term for Palantir investors, but we need to be realistic with our expectations. This is, of course, just my opinion and not financial advice. There's a lot of talk on social media right now about this stock, but always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. When I get 400 likes and comments, I will do another Palantir update where I explain some little known facts about the company that could have a huge impact on the stock price. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the